Good afternoon, everyone. Welcome to today's Wednesday market review. My name is Stock Darts, and as I just mentioned, today's Wednesday, which is when I typically like to look at the markets and get a good analysis of what's going on with the four major market indices. Those being the S&P 500, the NASDAQ Composite, the Dow Jones, and the Russell 2000. Once I finish taking a look at those, I'll take a quick look at the US dollar. I'll see how gold, oil, and silver are behaving, and I'll also take a quick look at Bitcoin as well and see how the cryptocurrencies are reacting to the US dollar and to the stock markets as a whole. Once we finish looking at the market and the commodities and stuff, if we have time, we'll go ahead and take a look at some chart reviews or chart requests. If anyone in here has a chart they want me to look at, feel free to type it into the chat tab. I'll be more than happy to go ahead and take a look at it and spend some time trying to analyze it. If you like what you see here, you can always follow me on Twitter under the name Stock Darts. You can find these videos on YouTube under the same name, Stock Darts, or you could visit me at patreon.com/StockDarts, where I post weekly blog content including trade ideas, as well as generally expanding on some of the market analysis we do on these Wednesdays, as well as also having these. I'll always re-upload these on there as well in case you're looking for my analysis on the market, but you miss it on Wednesday during lunchtime. Other than that, let's go ahead and get started. First thing we want to do is take a look at the S&P 500 through the ETF SPY. Markets have been struggling over the last couple of weeks. It doesn't look like it on the, if we just look at the chart of the overall index, but underneath the surface there's a lot of stocks that have been selling off, particularly in some of the tech names and some of the names that have done well recently. However, as you can see with the action that we had yesterday and today, looks like we finally flipped it back up, flipped the script, and are looking to make our way back up towards highs. We encountered a lot of selling and a lot of selling pressure as we were trying to make our way to new all-time highs, and then as you can see, we kind of gently pulled back into the 20-day moving average, and we had a bit of volatility increase yesterday and today. You can see we actually had a pretty big drop in the morning, came down and almost tested the 50-day moving average, and then we closed the day off pretty strongly to make ourselves make our price action kind of come back over the 20 and over this this level that we pointed out last week around 385. We're holding pretty well along the technical levels that we've been watching. If you remember from last week, we were expecting a likely show of support around the 20-day moving average, and the key was there enough support to keep the price action from not dropping all the way to the 50 and down to the bottom of this channel. And it looks like at the moment that was the case. We did have that temporary drop yesterday, but like I said, the bulls look like they finally flipped the script and have taken control again after really getting tired and struggling to make it past all-time highs. Now, nothing has really changed. We're still basically consolidating below all-time highs and still are probably going to find a heavy dose of supply and possible distribution as we come back up to the 392, 394 area. So we'll see if this change in momentum that we're seeing today in particular is going to be enough to sustain the price action and make its way back up through our recent highs and up into new all-time highs. As you can see, we're still in the upper half of this channel, at least as far as the S&P 500 is concerned. You're going to see a different picture when we look at the other indices like the NASDAQ, and then a little bit of a stronger picture on the Dow and IWM. And what we're seeing here is basically what we've been describing for the last couple of weeks, which is sector rotation into other areas of the market, particularly into the small caps and some of the beaten up names, even in the Dow. A lot of energy related names, and now we're starting to see a lot of travel names, and this is a trend that's been in place now for a couple of months, and we've discussed this for a while now. Since the turn of the year we've been looking at this, and basically with the continued rollout of vaccines and people starting to get a little bit more bold about stepping out of their homes and traveling again and working again, we're starting to see names that were really beaten up last year finally start to rebound and start to improve. JB, if you're in here, I know we were just talking about it on Discord. The airlines have done well over the last couple of weeks, and so have cruise lines, and on top of that, so have casinos. Three areas that are generally tied to people wanting to go out and travel, and three of the areas of our economy that have been hit pretty hard, which of course is travel and well, basically travel and like casinos and stuff like that, where people are not really going to do that if they're going to be worried about getting sick. And so At this point, it looks like all of that, these recreational areas of the market are starting to pick up some steam. Disney also had a big move. And so it looks like we're starting to price a recovery. And so what's happening is we're getting rotation out of some of these tech names that have done well throughout the last year because they benefited from us staying at home. Stuff like Netflix and Amazon. And we'll go ahead and take a look at those charts when we get to the NASDAQ. But how long that lasts is still up for debate. We're still not completely at a point where we can really go outside without masks, and not, there's still a significant portion of our population that doesn't have a vaccine yet. So we're not really out of the woods, but the market at this point is starting to price it like we are. And so a lot of these really beaten up names are starting to perform better. Energy continues to perform better as well because of oil and the run it's been on. And so that's what we're seeing right now. And so, there are certain areas of the market that if you follow them closely, you'll feel like we're in the middle of a much stronger pullback than what we saw so far. But I think the reason for that is the market is still, as a whole, holding up well because a lot of these other areas that are starting to recover as people take profits in some of these stronger names that are starting to slow down a bit. And like I said, we'll dive into a little bit of analysis on this as we move past the indices or as we go through them one by one, and we'll see some of these areas that are starting to pick up some steam. Now, as far as the S&P 500, we're just looking at it in the vacuum and looking at SPY. As you can see, we held up pretty well as we tested the 20. The 20 and the 50 are still aligned in a pretty good formation that indicates a strong trend. Anytime you see the 20-day moving average, which is this kind of brownish one, and the green one, which is the 50-day, anytime you see them kind of going up in a nice 45-degree angle parallel to each other, that's indicative of a pretty strong bullish trend. And until we see them start to roll over, we see them cross, we can expect that to continue. Now, we did see the 20 flatten a bit with the action that we saw last week, but it's still holding up pretty well. And now the next thing is, are we going to be able to push past that and get back towards these highs around 392, like I said, and possibly beyond that? And so that's the next test, and that's probably going to come either today in the afternoon or tomorrow morning, where we go ahead and really try to push the envelope and get to new all-time highs. If we fail here, if we end up finding the same kind of selling pressure that we saw over the last couple of weeks, then we're going to head right back and test the 20 and likely try to push the price action back down towards the 50. So I think right now we definitely have flipped the script, like I said, and the buyers are in control, and they're going to push it to all-time highs. And I expect us to continue upwards, probably tomorrow or maybe even today until the close, and really challenge this. But what happens when we hit that level is really the key. And how we respond to that over the next few days is what will dictate what's going to happen with the market from here to, say, next Wednesday and as we start to approach March. We've gone through most of earnings season, so we've got earnings out of the way. There's really not any kind of major catalysts that can affect the market, so we should be trading off of price action, which means price action will probably respect a lot of these trend lines and these moving averages that we're looking at. So taking a look at it here, if we extend this trend line a bit, right? That gives us an idea of what the S&P 500 could do in the next few days as it tries to come up, and particularly if we can break through all-time highs. There's still not that much upside, really, if it's going to respect the technical levels and the technical indicators that have been kind of confining it for a while now. If you'll notice, since November, we've been steadily climbing higher, using the 20-day moving average and the 50 as kind of the support zone. The bottom of this channel is really more just to kind of visually represent it. I wouldn't put too much faith in this because in the end, this trend line is not really doing much. It's just kind of following the moving averages. And so what we're doing right now is using the moving averages as support and using the top of this trend line as resistance. And so as you can see, we're kind of in the middle of the channel, a little bit past it, so not that much upside here. So if you're looking at it as far as risk reward, we had a decent risk reward yesterday, but for the most part, we're still in a spot here, if we're just looking at the SPY, where there's not that much upside versus the downside. We're really smack in the middle of the channel for the most part. So we're still at a point where we probably want to be a little bit more careful with our trades. There are other areas of the market that are giving us better risk reward, and those are the areas that we want to focus on. But as far as just the overall market, as you can see, there's still not that much potential upside here compared to where we stand and what's looking at us down below. Now, that being said, the downside's not that significant either unless we break the 50. at which point then there is definitely room to come down and test maybe 370 and all the way down to 365. But at the moment, that's not really in the cards. Like I said, we already came back and tested down, and we found buyers, and the buyers are now back in control. So the next step is, how high do we go before the sellers go ahead and try to assert pressure on the market and try to take control back? And so that's really what we're looking for on the S&P 500. Now let's look at the Nasdaq, and we're going to see a little bit of a different picture here with the Qs. You'll notice the Qs had a pretty significant breakdown of the 20, and they are trying to find support at the 50. This is actually the first time that we hold or test the 50 since way back in October and September, late summer, early fall, where we were consolidating and actually almost double topping in the market before we kind of made our push into the holiday season. And so a very drastic different picture compared to what we're seeing on the S&P 500. And this, of course, is due to some of that sector rotation I was telling you earlier. We're having money rotate out of a lot of the FANG stocks and out of a lot of other stocks that have benefited from us working from home and from having to go to the doctor online or shop online, or basically any of the normal consumption that our society does has been done through the computer over the last year, and those stocks have really rallied because of that, and now we're starting to see a little bit of downward pressure on them. So we're going to, just real quick, want to point out a few of them. So you take a look at Amazon. You see where Amazon is compared to the overall markets, and it's still holding up well, but it definitely has been struggling because people are kind of moving away from this and into some of these other names that are finally starting to recover. See, with Netflix again, it's holding up well. It's not necessarily falling apart, but it is lagging compared to what we're seeing in the overall market. Same thing with Google. Google actually has done a bit better, and you can see that it has recovered. But it was struggling for a while, and as just generally speaking, now Tesla's not necessarily the same picture, but it has been related pretty closely to the FANG stocks, and you can see what's been going on with that. Now, some of the other names that I've had in my long-term portfolio since March that you can see starting to struggle a bit. Another one is Teladoc. This is another internet-related health company, and you can see that they're starting to see a little bit of selling pressure. DocuSign, which is another internet company that has facilitated a lot of online transactions recently, particularly in 2020. And you can see they're slowing down now. I still like all of these names, and I still think all of these names are the future as far as how we're going to go ahead and kind of go forward in the world that we live in now. This trend into moving into online commerce is something that's been in place long before we had the coronavirus, and so it's not like this is really going to end all of a sudden just because we can go back to work. Zoom is another one, obviously. Zoom Communications, you can see they were doing pretty well. This was actually a nice trade that we had on my Patreon page, and you can see they've struggled recently as money is rotating out of this space and into other areas like airlines, which we'll get into a little bit as well. So a lot of these tech areas are getting hit, and of course that's going to be reflected in the Nasdaq and in the Qs. Now, I still think that these tech names are a good value, and I think the fact that they've come down to support, I wouldn't necessarily ignore them and avoid trading them. I think that they're still worth taking a look at. We just need to wait for buyers to take control and to go ahead and try to push the market back up. As a matter of fact, Tesla was one of the names that we focused on this Monday in my Patreon, and as you can see, we were looking for it to come down and maybe find support around the 650 area, and that's exactly where it found buyers, and it's starting to bounce back up nicely. So there are, despite the fact that these names are struggling, they are providing us with opportunities, particularly on names like Apple and Amazon. These are stocks that are usually very strong, and when we can get them at discounts, it's usually a good time to go ahead and try to take advantage of that and see if we can go ahead and pick up some of these names at a discount. Amazon, of course, another one that has been strong historically. If we go and just take a look at their weekly chart, and anytime that you could buy this stock at support, it's usually a good idea. And the fact that it's back down here, I think, is okay. And then one final one for those of you guys that are into some of these internet names. HIMS is another name. It's a recent one, and you can see this is actually a very good spot here. So free trade for anyone that's in here. I think this is a really good buy. I started adding yesterday and today, and I think that this is a really good, nice tweezer hammer, or two tweezers. right at the 50-day moving average. And again, this is a stock that it benefits from people shopping from home. These guys provide people with Rogaine and Viagra and stuff, and you can just get the prescription over the phone or online instead of having to visit a doctor, which a lot of men are embarrassed to do. So these kinds of names, they've been hit hard because we've had money rotating out of tech and out of a lot of these internet-based retail companies. But I think that there's still good buys now that they're coming back into support. And I don't think that this rotation is permanent. I think that a lot of these names are still going to recover and are still going to be a part of the future as far as how we're going to continue to use our consumption and how we're going to continue to shop and stuff in the next decade or so. Now, looking at the Qs again, now that we kind of did a little deep dive into a few of these names, as you can see, a lot like those FANG stocks, it is finding support at the 50-day moving average. However, we did break this pretty tight channel and this pretty well-formed channel. So this is a significant change in character for the price action. We discussed this last week, that there's a pretty decent chance, and I think we might still see this on the SPY, despite the fact that we're really close to all-time highs. If we falter again, I think the SPY is going to mimic this next, and it's going to break its channel and start trading sideways. We've had a pretty good run since the holidays of last year, and at some point this rally, it's going to get tired and it's going to shift. Now, this doesn't mean that we're topping out and that we're going to head all the way back down to whatever we were at the middle of last year. It could just be that we need to form a base, spend another few weeks consolidating and finding more buyers before we're ready to kind of make our way back up. Or it could be that we spend a few weeks consolidating and then need to head back lower. But my inclination here is to say that we are more likely than not shifting to neutral rather than necessarily to a downtrend. However, usually buyers step in on these initial pushes down or pulls down. So there's a pretty good chance that we kind of come back up. Now, the key area here for the Qs is it needs to break back above. It needs to break back above 328, 329. That's kind of the important thing. And typically what happens here is you come up, you hit this level, then you fail, and you come back down. Another piece of price action that we want to pay attention to is often when you finally break the 20, you hit the 50, and then you come up and you test the 20, and you chop back and forth a bit before you resolve. However, that usually resolves to the upside. So in the long term, I'm still bullish on the Qs. In the intermediate to short term, I'm more neutral because I expect, in the short term, I'm bullish because I expect it to come up and test the 20-day. But in the intermediate term, I expect this to become a transitioning phase where we start to trade a bit more sideways rather than continuing to climb up unimpeded to new highs every couple of weeks. And so until we see money rotate out of the Dow and out of IWM and back into the Qs, we can expect a short-term bounce, but probably in the intermediate term, we're going to really struggle to get back above this area, and are probably going to trade sideways and come back and retest the 50 once we do test this area around 330 and possibly a little bit above that. Now, to the downside, I think we have a good floor here around 310, a little bit above 310. If we do lose that, there is more room to the downside around 300, and I expect that to be a very strong floor on the Qs. That's going to be the previous resistance where we tried to double top, and we didn't really test it too strongly when we broke past that. We didn't have a really good retest, so there's a chance that we need to come back and retest that price point. But that's a pretty significant area that I expect buyers to defend with a little bit more tenacity than maybe what they did right now with the 20 in the bottom of this channel. Now, we look at the Dow, you can see a totally different picture. And I think, again, this shows just the kind of rotation that we're seeing in the stock market right now. The Dow Jones is broken out to new all-time highs. A lot of its components are energy-related or travel-related, like American Airlines or Boeing, really Boeing, not American Airlines. And so they're starting to really break out. This is a good sign in that even though the NASDAQ is really struggling, we're seeing strength in the market still, particularly in the Dow, which is one of the popular ones the news likes to show. It's a very big shift in character from when it had its own bearish breakdown. So this was where the NASDAQ is right now. The Dow Jones was there at January. We had the nice channel. We broke below the channel. We came and we tested the 50. We went back and forth between the 20 and the 50, and then what happened? It resolved to the upside and really exploded. So if you're looking for something similar, that's where the Nasdaq is at the moment. We just broke that channel. There's going to be a channel here that's going to form, or a trend line that's going to have to challenge. If it gets back above that, then it's likely going to do very similar to what the Dow just did, right? You can see where the Dow is, or where the Dow was compared to where the Nasdaq is now, right? So not all hope is lost as far as the Nasdaq is concerned. But like I said, the good thing is the Nasdaq has been leading very well over the last year, and the fact that it's struggling, and we're still seeing a lot of strength in the Dow and in IWM, which, as you can see, is up 2%. It bodes well for the overall health of the market, because, like I said, it shows healthy sector rotation rather than everything dumping at the same time, which means that traders aren't necessarily fearful. They're just taking profits and then moving it along to areas where they think that there's still good rewards. And so that's what we're seeing here. Very nice breakout. This, if anything, shows that there's a possibility the SPY could break out as well, and push past its all-time highs. And we'll see how this goes. We'll see whether it could sustain this over the next day or two. And if it can, then it should have a constructive move up. And then when it does pull back, it should use this as a new area to kind of bounce and confirm and kind of flip this from resistance to support. Moving averages had started to kind of get close together, but you can see they're starting to turn right back up and continue to indicate that there's a strong trend in place here, and that it can continue a little bit further. You can see the trend line at this point was defended pretty well. And so overall, things look good with the Dow. I don't think there's anything else to point out. If we're looking for a change or a pullback, then the big thing to pay attention to here is, do we fall back below this trend line and below the 20? If that happens, that means we're likely going to fall below 311. And anything on this side of these three areas of converging support would be the opposite of what we just saw earlier, right? So before, we had three levels of support here. We had the ascending trend line, we had the 50-day, and we had and then we had the resistance over here. The flip back above it indicated a strong move, right? So it's the same case. If we have a reversal of this, if we get back below it, that's going to indicate a weak move, which means we're likely going to head right back down to 300 and possibly a little bit below that. But if not, for now, it looks like all systems are go, and the Dow wants to continue rallying. And then finally, we want to look at IWM. And as you can see, IWM not at all-time highs like the Dow, so relatively speaking, it's struggling as far as the intermediate picture is concerned, even though in the very short term, it's actually the strongest index today. Very good support here at the 20, at the bottom of this channel, which is a little bit more significant than maybe what we saw on the SPY, because the bottom of this trend line actually is intersecting with some price points. But the big thing to look at again is look at the 20 and look at the 50, still climbing very steadily, still showing a strong trend that is intact. And much like the S&P 500, I expect IWM to come back and retest highs probably tomorrow. And then what happens at those highs is the big key. Is it going to follow the Nasdaq and the SPY and stall out, or is it going to follow the Dow Jones and break out to new highs? And if so, how far do we go from there? Will this channel remain intact, or will we see what we're seeing on the Nasdaq, an erosion of price action that leads to sideways moves and to a base being built? And so we're a little bit of a turning point here, where, like I said, the market is rotating, and the question is that rotation going to continue to sustain this channel, or will it eventually kind of stall out and we're going to really follow the Nasdaq and start to consolidate and trade sideways? Because again, a lot of these areas, and let's take a look at a few of them. So let's look at some airlines. Look at Southwest Airlines. We're already at a point where people probably want to take profits in some of these. So there's a decent chance that we rotate out of some of these Dow names and some of these IWM names. American Airlines is the one that's struggling, I think, the most of these. But even then, you can see that where they are and what they've done. JetBlue has been on fire. Delta has been on fire. And then if you look, even cruise lines, mimicking almost the same pattern. Matter of fact, these candles look almost identical. You can see the chart looks basically the same. And all of these are doing very well. And you know, JB, we were talking about earlier, this was a missed move. I did not expect these stocks to do as well as they did. It's an obvious trade in hindsight, and we probably should have been on this a little bit, considering you know, the fact that we analyze these things every week, and we know that um, oil has shown us that energy, you know, that there's demand here, um, that people are starting to kind of come back out of their homes, and a lot of this is done well. Another area was casinos. You can see, we take a look at when, see what they've done, and again, almost identical to the cruise lines. Las Vegas Sands is another one, and just generally speaking, all of these names have done well, which again is showing that people are willing to come out and willing to start traveling again, and to start just not being quarantined at home. And we're likely going to see something similar with restaurants as well. And so, you know, all of this is reflecting a market that is starting to rotate into some of these areas. However, a lot of those look like they might need to take profits as well. So the key is, when we hit these all-time highs, are we going to stall out because rotation is going to come back into the NASDAQ now that a lot of these other names have kind of hit resistance and are looking at profit taking, or not? So it's kind of an interesting week here. There's a lot of things to dissect as far as where we want to trade. Like I said, I actually, even though looking at these, the NASDAQ is by far the weakest, I'm still okay with picking up a little bit of these names because I still like them long term. However, as far as swing trading is concerned, we definitely have to be pretty careful with them because they are showing momentum to the downside, and there's a possibility that it takes a bit longer to kind of stabilize. Meanwhile, some of these other names, we should probably be riding the momentum higher. All right, so let's take a look at oil. Actually, well, first let's take a look at the U.S. dollar. By the way, those of you that are in here, thank you for attending, and I hope you are enjoying what you're seeing here. If you have any questions, feel free to type them into the chat, and I'll be more than happy to take a look at anything you guys are looking at, or even answer questions if you have questions about some of this analysis that I'm doing. So here's a look at the U.S. dollar index. The U.S. dollar struggled again from last week to this week. It's up a little bit today, but really just kind of just really stuck in neutral. This is not a bad thing, because as long as it's not breaking down, that's actually good for the U.S. dollar. If we look at the euro U.S. dollar, you can see, and again, it's going to be the inverse of this chart because this one's based off of the euro. So up is good for the euro here, and as you can see, the euro, it was breaking down as the dollar picked up some strength, but it's kind of punched back a bit, and we're at a pretty critical juncture. Where either the euro is going to break out and push the dollar down further, or the dollar is going to continue to kind of push and exert its pressure on the euro, in which case the euro will pull back as the dollar rallies. And so, as you can see, this is a pretty important point of contention here, and we'll see what ends up happening here. Now, if we look at the U.S. dollar versus the yen, we'll see a different picture, much stronger, as the yen has been pretty weak recently. And actually, not only did it break its downtrend, it's actually emerging with a nice little uptrend as it starts to break its 200-day moving average. And so this is, if you're trying to trade the U.S. dollar as a bull, this is probably one of the charts you want to look at. Now, opposite of that is the U.S. Canadian, and you can see where the Canadian continues to exert pressure on the U.S. dollar, and you can see the U.S. dollar really breaking down here. And again, this is a function of not just the currencies, but oil. If we go to the oil futures, keep in mind, again, that's one of the big trade products between the U.S. and Canada is oil. And so very often you'll see a correlation there where if oil goes up, the Canadian dollar goes up. And in this particular case, you can see oil has really broken out. It hit the 20. We had this consolidation, then it's really just expanded upwards. I personally feel like it's getting a little stretched out and a little overbought. But as you can see, volatility is still expanding, and as it's doing so, it's still climbing up. So there is potential that this can continue a bit longer. It could squeeze a bit and make its way into the mid-60s. So not completely done here. And like I said, that's exerting a lot of pressure on the U.S. dollar. And again, this is a reflection of the fact that the market expects us to continue to expand our economy and to consume more energy, right? Which means consuming more oil. And so that's what we're seeing here. is a picture of that. Now, how much longer this can continue is up for debate, because again, the higher this goes up, the more pressure it puts on some of these names. And generally speaking, you really don't normally see cruise lines and airlines go up with oil, because that leads to higher costs for them. But like I said, right now they're moving together because it's indicating a change in character, where people are willing to go ahead and travel again, which is going to mean that they're going to need more oil as energy demand increases as well. So that's what we're seeing there. Now, gold and silver. Again, poor. The dollar, even with all the dollar weakness, gold continues to not really do much. Silver a little bit better, but even here, not that impressive. I think at this point, gold and silver to me are, I don't know, it's going to be a while before I have any kind of faith in them. I just don't see any reason to try to trade gold or silver when there are other charts that are doing better things. For those that use these as stores of value against the dollar, I think that we've hit an age where you want to be in Bitcoin and Ethereum instead. And there was a significant drop in Bitcoin over the last few days that kind of coincided with the market when it was pulling back a bit. And we're seeing a little bit of stabilization here at the 20-day moving average. There is increased volatility. There's always the chance it comes back and retests the 40,000 area. If that does so, I think that is a fantastic buying opportunity. I think 50 is an okay buying opportunity. Not a fantastic one, but a decent one for people that never got any Bitcoin and they feel like they're never going to be able to. This is probably a spot to maybe start a small position, but if it gets back to 40, I think that's a much better place to go ahead and maybe start to look at something like that. And the same thing with Ethereum. These are the two main cryptocurrencies that I think everyone at this point should probably be looking at. And in my mind, instead they're replacing gold and silver as kind of the areas where if you want an anti-dollar play, then maybe you want something like this. And so again, Ethereum actually did come down to a pretty key level here, right around 1390. And for those that were quick, they maybe got a little bit of it there, which was a pretty good buy. And as you can see, just like we mentioned with the markets, it's doing what happens very, very often when you have a strong trend. Eventually, it's going to have to kind of come back down, right? The moving averages will always catch up to price. That's just the way math works. What often happens, once you break the 20, you test the 50, and you chop back and forth between the two, giving price action a little bit of time to go ahead and work its way through as new buyers come in and sellers leave, and lets the moving averages kind of stall out while the price action starts to kind of recalibrate where it wants to go next. And what often happens is it'll chop back and forth between the two, and then in the case of strong trends like this, it usually resolves back in the same direction, which would mean back above the 20 and back towards these levels close to 2,000. It's still consolidating, so those that are more cautious don't necessarily need to get involved in Ethereum yet. But like I said, just like Bitcoin, I'm much more excited about Bitcoin and Ethereum than I am gold and silver. The potential rewards you could get on these is so much better. And it's the volatilities, it pays off so much more than what you can get out of SLV or GLD. And so I still think that these are the areas to go for. And then again, for those, I don't want to go into it in too much detail here, but for those that are actually savvy crypto investors or crypto traders and are willing to trade other areas, there are other instruments like, say, Binance, which can give you explosive moves as well. And again, this is why I'm saying, why would I ever trade GLD and try to get a 3-point move or a 5-point move when you could trade something like BNB and get a double in 2 to 3 days, right? Or where you could get stuff like this, these smaller coins, where you can get 13, 15, 18% on these within the span of just a few days, right? And so it goes back and forth. So it's a two-edged sword. You can also drop 10 or 15% in the span of a couple days. But if your timing is right, if you're a trader who has good discipline and the right setup and the right approach, then you should be positioning yourself in a place where you're more likely to get the 20% up than the 20% down. Of course, it's not a given, but the kinds of potential moves that these things give you has kept me trading even when I wasn't that excited about the market. So this last couple of weeks, I didn't really like what I was seeing out of the market. It looked like it was going to pull back. and a lot of the stocks that I was looking at were either pulling back or were at areas where there just wasn't good risk reward. And when that happens, I just flip to cryptocurrencies, or I flip to the U.S. dollar and do a forex trade and just wait for the market to give me better opportunities. And so at this point, a lot of these cryptos have been really good, and have been providing the right amount of volatility to go ahead and try to make some money while I'm waiting for the stock market to give me better opportunities. And that might continue for the next couple of months, because that area, the cryptocurrency area is really starting to heat up, and there is potential for more explosive moves. Now, there is always potential for bigger moves to the downside as well, because that's just the nature of volatility. But generally speaking, I'm pretty happy with that area right now. And you look at SLV, and it's like, you're looking at 2 points of upside and 3 points of downside. It just doesn't make sense to try to, oversize yourself to try to make this worth your while. Same thing with GLD. There is potential for a move here. There's a nice, what is that, 5-6 points of upside from where we are right now, but it's just not worth. I don't feel like it's worth the equity that you need to tie up in this when you could put it in something else. So, in my mind right now, gold and silver are not at all appealing. The problem with energy right now, a lot of these energy names, a lot of oil names, a lot of travel names, they've all made their move, and so at this point, they're going to need to consolidate, and we'll see whether the money rotates back into tech. If it does, then I think that's a good trading opportunity. If not, then no big deal. You just try to find return somewhere else. And so, the one problem maybe is that these cryptocurrencies have probably kept me from scanning some of these oil and some of these travel names, and so I missed a pretty good opportunity trading some of these airlines or these cruise lines. But like I said, it's because my focus was elsewhere. However, we got to make sure that we're more thorough about that. So we'll have to try to keep an eye on some of these areas and try to do a better job of finding them in the coming weeks. All right, so that covers pretty much all I have to talk about. So if anyone in here has something they want me to look at, feel free to type it into the chat. If not, we can call it a day. Again, for those of you that are in here, during the week, if for whatever reason you have a question on the chart and it's not Wednesday and you want to ask me, you can always ask me on Twitter. Like I said, just follow me on Twitter at StockDarts, or you could visit me. You can visit me at my Patreon page and go ahead and take a look at what I'm looking at. Typically, those articles, even if they are the subscription variety, they usually go free after a few days. So you can always follow along and see what it is that what we're doing, or at least what it is that my plan of attack is and what I'm working on. All right. So just to put up the information again, follow me at StockDarts on Twitter, or you can visit me at patreon.com/StockDarts, where, like I said, you'll find blog posts basically outlining my thought process for each week. All right, Jay. Looks like that's JDB 211. You want to look at a couple of these electric names, right? All right, so Plug, so along with a lot of the NASDAQ, Plug has kind of pulled back now. Here's one problem with Plug: 1 day for earnings. Okay, so generally speaking, I do not want to trade these types of names during earnings unless it's an actual earnings trade, right? So let's go ahead and take a look real quick. I want to see what kind of volatility we can expect out of Plug, just to show what you'd have to go ahead and take a look at. Now, this might make it a better trade tomorrow once it does report earnings. But all right, so we look at the historical earnings. You can see it moves. It's had some pretty big moves: 7%, 15, then 5, 5, 6. All right, so maybe one big move and a couple of decent moves, right? But this is the kind of volatility. If you tried to get in today, understand that there's a chance that tomorrow, when they report earnings, probably after the market, there could be some volatility that comes into play there, right? So you said, okay, so you said you're accumulating. So you're already holding this. Now, the fact that you say you're accumulating means that you're looking at this as a longer-term hold and not just a swing trade, which means you kind of have to work through earnings and just go through the volatility. Now, I do like the hammer and the first bounce off of that, this mimics a lot of what I'm seeing in the tech names in general, which is that we went to the 20, we went to the 50, and then we finally found some support now. The key here is this gap here. It looks like we filled it. We broke through and filled it all in one day, right? And there's a lot of buyers that stepped in, and this is a pretty decent area of support because again, it was kind of the last area. You can see we had Plug had this nice consolidation, and then it kind of took off, and then it spent a little bit of time consolidating here, and then a little consolidating here, and then it really just broke out. And then obviously it spent time consolidating and failed, and it came down, and so we just retested this gap here and this previous area that we kind of held up, right? So that's a good level, and the fact that it's already bounced is a good sign. Depending on what it does, if you said you're already accumulating, did you add over the last few days? If you didn't, this is a good spot to add. However, maybe you wait for the earnings and see if it can, as long as it holds above 40, 43, 42, then it's a good place to add. The price action has changed on this. Okay, so you bought some yesterday in the hammer. All right, so you did. That was good timing, and that's what you want to do in long term. So there's a little bit of a different approach to long term trading versus swing trading. So for swing trading, I don't like to buy on candles like yesterday's candle because that's not really confirmation of support, right? That's just a move down to support. However, for long term trading, you want to buy at value and you want to buy at support. And so if it's a name that you really believe in, then you want to buy at the support levels. You don't necessarily want to wait for confirmation, which means that at that point a lot of times you're buying at a much higher price because that's how typically it takes a while for it to really show support, and by that point you're not at the real good lows, right? So I think that's if this is a longer term holding, then I think yesterday's buy is a good one. Like I said, for a swing trade, I don't think this really presents a good swing trade opportunity. But I think if you're looking at this as a longer term play, then this was a good spot to add. Now there is potential for further downside. This is a pretty nice shift, and this is what's happening in a lot of the tech names. And this is the thing that we really need to pay attention to. Is this the beginning of a much bigger consolidation? Or was this just a big blip as stocks are rotating, and is money going to rotate back into something like Plug? The electric vehicle space has been on fire, and I think long term this is still a really good place to be. So there's a pretty good chance that this is going to make its way back higher. However, as you can see, there's going to be significant resistance building up as it comes up and tests the $60 area, as the 20 comes down to meet price, and as the 50 flattens out. So I think you're okay here. I think this was a decent spot to buy. However, this is probably a stock that's going to be trading sideways, and that, like I said with the NASDAQ, that I feel like we're transitioning towards more sideways price action. I think that this is probably what's going to happen right now on Plug. You said you were not buying high. Fortunately, yeah, that's good. Yeah, like I said, if you were being patient, that you were patient. I think this is a good entry. Yeah, no, I agree with you. I think that it's a good space to be, and you have to weather the storm sometimes for these longer term trades. But you did the right. This is where you want to buy. You didn't want to buy this at 65 if you're looking at this long term. Like I said, it's a completely different approach for long term plays as opposed to short term, because when you're swing trading in the short term, you want to buy momentum because you don't want to be in for these pullbacks. But it's the opposite. When you're long term trading, it's the same thing. You don't want to be in for these pullbacks. So instead of buying the momentum, you want to wait for these pullbacks and then buy them, because at this point now the chances are higher that it's going to fluctuate back up before it fluctuates further down. And so you put yourself in a place where you can more comfortably hold, because it's more likely to at least bounce initially. Even if it does end up heading down south further, you're going to get a little bit of a bounce, and it's going to give you a buffer as it starts to consolidate. So I think that this is fine. And the other one, again, it's same kind of play is FCEL, and it's the same analysis pretty much. You've got the 20 and the 50 starting to flatten out. We had a kind of a big pullback here. Yesterday was a very nice hammer on the 50. Another nice hammer following up today. It hasn't really broken this downtrend yet, but again, I think that this is good support, and I think this is a good buy at the 50-day. There is potential for further downside, so just like, the one thing to add also, as far as the approach, you said you're accumulating, which means you don't want to buy your full position in one swoop, right? Because there's a pretty good chance it comes back down and tests the $11 to $10 area, at which point you want to add more. Because for long-term stocks like this, you want to kind of average in, right? And so I don't know how long you've been accumulating, but if you just started, then the $10 area is going to be another. 10 to 11 is the next area to go ahead and keep accumulating. And we'll see whether this is another one that transitions to sideways price action. It has earnings in 20 days, so that's not that far away. So that's another thing to keep an eye on. But there's not much you can do if it's something you plan on holding till the end of the year. I'm okay with both of these. I think that you did fine in adding where you did. This is very similar to the play that I took on HIMS. That I didn't mention it on Patreon, but I figured I'd give you guys this idea today. This is a very similar type of play, even if it's in a different industry, where this could end up being transitioned into a sideways chart right now, where it struggles for a while. But I'm okay with, it's the same idea. The hammer's on the 50-day, and what looks like money rotating, at least starting to rotate back into the tech space. And if so, then I'm okay with buying my hammers here. But again, I'm leaving more ammunition to buy if it heads down a little bit further. And so what you did with these two, I think, is basically the same idea. And I think that that's what you want to do. When you find these names that you really like, you want to wait for them to come to areas that you're comfortable buying. And you want to go ahead and take your shot as they get to those areas. Okay? So, all right, I think these are both fine. I got no problem with either one of them. I think that you did good there. As long as you have room to add more, then I think you're in good shape. Let's see what plug. The last thing, I didn't mention any additional spots to add on plug, but it looks like it would be like the 30 to 25 area, probably when the 20-day comes up to meet it, assuming that this drops further. And again, I think that'll be fine there too. Okay? Alright, well, JB, thank you for participating. It's always nice when I could talk to someone and look at some stuff other than just my own stocks. I like this area. As you can see, I have on my watch list a nice little group of electric names as well, right? We've got Candy, we've got Neo, which was one we looked at recently. This was a pretty failed trade on our part, but this was one of the trades we were looking at. But as you can see, I do follow some of these names and pay attention to that space as well. So I think it's a good spot and a good area, and I think it's a good spot to go ahead and take shots as they come back into support, because they're decent long-term trades as well. Bob is swooping in here at the end with AGEN. Genesis, I've never actually heard of this one. It's a biotech. This looks like it's setting up for a bounce. We had the explosive move, and it's come back down, and it's holding up. It's holding up pretty decently. So let's zoom out. Usually, when I've never seen a stock before, I like to zoom out and get a better picture of what's going on. So that's actually no. We want a trend line. So this thing was doing a good job of pulling back, right? And it broke out. Let's change these to solid lines. Right? And then you've got a major topping area here, right? This is a pretty important area that it's really struggling with. Let's go to the weekly. Let's move this. This thing's been annoying me all. This thing's been annoying me all day. All right, so if we look at the weekly chart, Bob, this is something that's important. So you said the spike was on positive outcome on trials, which is typically what you'll see in these biotech names. Is they move. These names move a lot on news, which makes them, in my mind, difficult to trade, because I like to trade breaks of trend lines, and sometimes the news trumps the chart, and it just blows through the levels that I like to look at. But in this particular case, the technicals could help us out. So if we look at the weekly chart, we can see this thing has a long history of volatile swinging back and forth between, about $1.50 and about $5. Now, between that, there's a pretty significant level here, right around 580 to 6, that is a ceiling, right? And there's a pretty decent floor, somewhere around $3, a little above 3, right? And so now we have an idea of what the typical range for this, which is basically 5 to 3. It will go above it and below it, but 5 to 3 seems to be a pretty good meet, right? So now let's zoom in to the daily. And so we can see that it's right smack in the middle of 5 and 3, right? It's at 4. However, that doesn't mean that it can't find support here, because it's, as you can see, the volatility is dying down. The down moves are getting smaller and smaller as it heads back into a pretty decent area that we can look at as an intermediate support area, which is right around here, right? Now, it doesn't necessarily have to hit here, but this is, in my mind, the ideal spot, right around $4 for a buy. It may not give us that, but what we're looking for here, Bob, is a green candle that goes back. So let's say tomorrow we get buyers and we get a green candle that goes back above today's highs, then that's the buy signal. If we get another red candle, then we want a green candle closer to 4. But what we want right now is, we've seen the selling slow down, and as you can see, there's been green candles before that attempted to give us buy signals, but they never really cleared the previous candle. And I'll zoom in a bit. You can see this green candle, this was a nice hammer, but it didn't really ever eclipse the previous 2 tweezers, which meant it weren't, the buyers weren't really in control. And this candle, this was a psych out. This could have been viewed as a buying opportunity as it tried to bounce, but you can see it faltered at the end of the day and failed, and then we went back below the 20. So what we want is a green candle, but one that actually kind of negates the price action from the previous day. So maybe tomorrow it gives a nice little bullish move. Now, if it closes green today and gets back above, say, 425, then that might be enough. But I think it still needs to prove that it's ready. But I think this one's close. And I think it's one that this is not a bad spot to buy around here. But I would want to see it actually show that the buyers have taken control again, which means a candle that kind of negates something previous. Like, we want some kind of buying pattern here, some kind of candle pattern that tells us the buyers have taken control again, because for now the sellers are in control as they push it right back down to 4. And 4 is the critical area. If it gets back to 4, that's really good support, but we would still want to see the buyers step up and support somewhere between here and there. Okay? You say you work at MGA. What is MGA? Oh, you work at Magna. Okay. This is, well, hopefully they're giving you stocks, because this one's been pretty good. All right, so hope that helps you, Bob and JB. Hopefully I think that all 3 of those stocks are good. Good. That's great. Well, whatever. Anything helps when at least it's a good one, not at least it's not a crappy one. It's one that's been going up pretty steadily, so that's always nice. I like all 3 of the charts you guys showed. I think all show potential. It's just a matter of making sure that you're structuring the play along the lines with what you're looking for. Okay? Thanks a lot for coming in and participating. And you guys both know where to access me if you ever have other questions. So we can wrap it up today, but I'll catch you guys in Discord. If not, I'll see you again next Wednesday.